We saw some pretty wild swings on Wall Street this week. One chart, though, really stood out to Carter. So why don't you head over to the plasma and break it down?
You know, one chart. It could be three or it could be two, but let's go with one. And it's a two-panel chart. And here it is. So the lifeblood of the system, financials. And then within financials, forget about insurance and forget about broker-dealers, but big, heavy banks. The KBW Bank Index, it is names, as you know, Citi, Bank of America, JP Morgan, Wells Fargo, and others. And what is remarkable, because it speaks to, frankly, not the importance of me, I'm nobody, the importance of technicals. A stock, a currency, a commodity, every single time it's come up to this, it has failed, it has failed, it has failed, it has failed. I mean, literally, it's touched that line. Sometimes you can draw circles, but the point is, it's every single time. Is that the DCF? Is that enterprise value to EBITDA? Is it the collective PEG ratio of those stocks? No. It's machines and it's charts and it's technicals. Here, even more unbelievable is that look at the performance on a relative basis. So the bottom panel is the BKX's relative performance to the S&P. And it literally has touched this line, and I'll do it with a red arrow here, has failed, has failed, has failed, and it got up here and has failed yet again. We're below where we were from the Trump bump, the election. So much hinges on the cyclical trade. The value trade is a trap. And I don't see anything that's changed, and I think this chart speaks to that as much as anything.
The value trade has become a trap, Tim.
Well, you know, the value trade got a fresh endorsement 6 weeks ago when we saw this violent rotation, and banks were a major beneficiary. And as we talked about probably in yesterday's show or 2 days ago, when essentially you had a two-day move in banks that took 5% out of that banking trade and left you back where you were. Well, in the last 2 days, I think you've taken half of that move back. When I look at the banks, I do think that there is a valuation argument in favor. Therefore, I think they can be more constructive. There's no denying what Carter's talked about in terms of where the KBW, which is certainly giving you the more pure bank exposure. The XLF, Dan, sometimes talks about not being the pure play, right? Because you've got a lot of Berkshire in there. Yeah. You've got some Blackstone in there. Certainly in the case of Blackstone, you've had an outperformer. Yeah. But banks in this environment where yields are going lower are going to come under some pressure, even though the yield curve has actually steepened in the last couple of days from the short end. So
I would agree with that. I think Citi on October 15th. I mean, we got where was Carter just now at
the plasma
at the smart board? He did an amazing job. But we often go there to do something that we like to call Tim. Please help me.
The power pitch.
The power pitch. Yes, and to Tim's point, we actually power pitched a bank a while back, saying maybe the bond market has gotten ahead of itself. Maybe at 65 to 70% of tangible book, Citi is cheap. But these are trading vehicles, and the move from 62 to 72 was exactly what it should have done. Yes, it bounced today, but I think banks, the trajectory has been lower. I think they continue to go that way.
Yeah, that was a great power pitch from a trading perspective.
Thank you, Dan.
No, the sentiment was bad, and it
Mel,
got
how do you
back
feel
to
that
a
we've
level.
now completely changed the name? You're shaking your...
I'm very frustrated.
But here's the thing. You know, we were
Friday.
talking about 2 weeks ago when JP Morgan made a new all-time high. It was probably the only bank in the northern hemisphere that has done that, right, if you think about it. And so, but what did it do? It went from 121 to that new high, right down to 110 yesterday morning, like that, you know? And so, like, to me, that's just a failed breakout. And the rest of the money centers have never made a new, like, they haven't even made a new high. They've just been trending down. And then you look at the investment banks. You look at Morgan and Goldman, they're disasters. They look like they're going to be different businesses in the next cycle. So, you know, I mean, to me, I just think you can buy these all day for capital return and for value, but they're just, they
This
look
sounds
dead
to
in the
me like
water.
one of those moments where you're going to tell me JP Morgan is the worst chart you've ever seen.
No.
I look at that chart over the last 2 years, stock's done nothing, but it certainly hasn't been a devastation. It's actually traded in a range with a company that's been giving you record profits. And actually,
I do. Mel's just sticking up for me. I say every time that one is down, that's the one you buy and sell everything else, because it just seems like that's the one.
It is the best in class, but also it has not provided any return, and adjusted for risk and beta, it's a disaster of a pick relative to other choices in the equity market.
Well, relative to staples and defensive. And look, you are right on a risk-adjusted return basis. We've seen a fair amount of volatility. I think a lot of investors that watch this show are not trading in and out of the market. They want to be with companies with good balance sheets. They want to be with companies that actually are improving their earnings
Can we just make one point? And maybe they want to split them up here. It's taken 10 years for these companies to delever, to get to where they are, to be able to return this cash, to have these values, and they're massively outperforming the market. So if we are late cycle and rates are going to zero, which
Who's
they
massively
probably
outperforming
are,
the market?
underperforming. Okay, and the
They're
banks
not
are
massively underperforming
Well,
their market.
they're Carter. Yeah,
they are.
yes, they are.
Thanks.
Okay, whatever. Okay,
I see J.P. Morgan is sideways, as is the S&P.
No. Hold on. You just saw it on the plasma.
he just showed you.
I just
What
showed
were
you
you
the
doing?
chart.
Picking your nose or something? Listen, here's the deal. If we are this
We gotta get
far
outta here.
along
Yeah, I mean,
after the
seriously.
financial crisis,
there it is.
this late cycle,
Split 'em.
why would you be buying banks even for a long-term investment? You were going to be averaging
Why,
it
why don't you
for
sell
years.
everything? Like, you guys are trying to tell me that banks are going out of business right now, and I'm telling you that the charts aren't that bad. I'm also telling you that J.P. Morgan continues to report record profits, and they're giving more capital back.
All right.
And I feel comfortable.
So why
owning
don't
that bank.
investors appreciate it? Why
All
isn't it
right.
outperforming?
Okay.
It's done what a lot of other
All
sectors
right,
have done.
boys.
Boys will be boys. I hate that expression, actually.
Why?
And you guys, I
We
never
gotta-
said anything about going out of business. Don't drag me into your mud.
right.
Sorry, bro.